Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's video, we're going to be taking a look back at the first month of 2025. January production results are out across the board, and in today's video, we're going to be comparing, contrasting, and analyzing each and every one of the miner production results. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. Let us know in the comment section below which miner you felt stood out in the month of January, how you're feeling about earnings so far, and your outlook for the Bitcoin mining sector in 2025 as a whole. Now, with that being said, let's get into today's video. Okay guys, here we go. Midday Sunday afternoon. We didn't even make it to the holiday Monday. Anthony, you've got us working overtime on the weekend here. That's okay because we did get all of our January production results put together, compiled, and you've brought along your infamous tables, charts, and graphs. So we're going to be going through production results the first month of 2025 in detail today, courtesy of you, Anthony, for taking some time to compile that data. Before we get into it though, one thing I've been noticing on X or Twitter this week specifically, a lot of companies starting to disclose or file their 13F forms. Now, we've seen a number of big accounts, HODL 15 included, going in, compiling this information, obviously publicly disclosing any Bitcoin holdings. And Anthony, it appears this is where the majority of the ETF inflow really originated from over the last few quarters. We've seen institutional Bitcoin holdings nearly double from Q3 to Q4 based on what's been reported so far. So as an accountant who's been in the space some time, what are these 13F forms? What do they mean? And why are we starting to see so many companies now adopting Bitcoin on balance sheet?
Yeah, I mean, in simple terms, a 13F document is a form used by Securities and Exchange Commission, the SEC, which requires institutional investment managers with over $100 million in assets under management to disclose their equity holdings publicly, which essentially provides, transparency into what large institutions are buying and holding, allowing investors to see the investment strategies of these prominent funds, like the BlackRocks and the Fidelities, and potentially, glean ideas for their own portfolios effectively. So as soon as they put their quarterlies out, they also submit a 13F to show what they've been investing in during that period. So it just keeps everything transparent for the retail investor to see.
Now, we've talked a lot about the volatility of Bitcoin throughout the year based on these filings, Anthony, and now with the understanding that this is really the big money. These are the big players, not retail, but the long-term institutional type investors. We've seen big adoption even between Q3 to Q4 here as this volatility in Bitcoin price has been going on. We've talked about on the channel multiple times, it's not the whales that are selling their Bitcoin. It's the small hands that are being shaken out. It's actually the big whales, these institutions that are buying. Does this surprise you at all to see this level of increase in terms of Bitcoin on balance sheet?
I mean, we've seen a phenomenal rise this year, and you're quite right. You're looking at a doubling of the amount of Bitcoin that's been accumulated in the ETFs alone. So the ETFs, there's about 11 of them that have been approved since January, the largest of which is the BlackRock ETF. And they've just been on a buying spending spree all the way through the last 13 months nearly. Buying up Bitcoin, and there's been some red days, but the green days of buying has certainly outplayed the outflows days there. So real traction through that 12 months. Hopefully, it will still remain that way. in 2025. We've seen a little bit of a flattening off in January, so in terms of inflows, outflows, but when you consider the amount of Bitcoin these ETFs have attracted in that first 12 months, getting on for 1.2 million Bitcoin in total.
Incredible. Now, we've talked about those ETFs really propelling Bitcoin throughout 2024. We've talked about the strategic Bitcoin reserve discussion, potentially acting as the catalyst to the next leg up. Another key segment of investors that HODL 15 just highlighted, putting out a list of 60 billionaires in the world that all have some sort of Bitcoin exposure disclosed. Elon Musk at the top of that list, obviously, Anthony, but this is another big amount of money held by very few people in the world. You talk about $100 billion under management. These individuals have 10 times that by definition, if not multi-billionaire status. So it doesn't take many of these people to take an interest in Bitcoin to see the price move either.
So yeah, I mean, looking at it, so this is obviously billionaires from a net worth position that hold Bitcoin at some level. And just quickly looking down there, you've got a number 32. You've got the President of the United States, Donald Trump, with a net worth, according to this table here, of about $7 billion. I'm trying to see if there's any from the UK on this list. No, we're all very poor in the UK. Oh, Richard Branson, number 50th with 2 billion. So we do have someone making it. But yeah, majority, we're talking United States, really.
Gotcha. Yeah, it'll be interesting to see as the FOMO in that elite circle of individuals starts to kick in as well. So, with that being said, markets are closed tomorrow. Obviously, Bitcoin hovering in the $97,000 range. Again, as of midday Sunday. On to the main event here, Anthony. We've put together the January production results. This is obviously a critical month for the miners. It's the first month into 2025. New president, new political sentiment in the United States. Obviously, a lot of adoption. We also saw the DeepSeek news come out and Stargate announced in the month of January. The first table, this is really a high-level summary of all the movers and shakers, all the metrics for the month. Why don't you walk us through some of the standouts here for the month of January?
Yeah, absolutely. So in terms of hash rate itself, you can now see, Marathon leading the way with 53.2 exahash, and CleanSpark went over the magic 40 number. Remember, we were saying only 12 months ago, we felt that 20 was going to be the number that a lot of these miners aspired to achieve. Now we're in sort of like 2025, and we have quite a few miners. We have the likes of Riot over 33.5. We have IREN at 31. CleanSpark at 40 and Marathon at 53.2. So four miners really running away with the show at the moment. In terms of operational hash rate, so this is, we have the energized hash rate, so the miners that are plugged in at each of the sites, but then we have the operational hash rate, which gives you an average of what they were actually able to achieve during the month. So, you might have 100 miners in your location, but during the month, because you've had to curtail, maybe do some maintenance, maybe do some servicing, updates, the weather conditions, that will affect hash rate itself. And so when you look at the average operational hash rate, the difference between that and the total hash rate, then is you're looking at how, literally utilization. And, that can be quite significant. So if you look at CleanSpark, they achieved 40.1 in terms of energized hash rate, but in terms of operational hash rate, that was down at 34.8. If you look at the likes of, when I always look at utilization, some standout ones, DMG, for instance, total hash rate of 1.8, average operation hash rate of 1.75. Now, remember, we're in the month of January, so January weather conditions weren't great, and that does impact the miners because when the weather conditions are so cold, then the domestic requirement for energy increases, and therefore miners will switch off to enable domestic users of energy to warm their houses. And when that demand reduces, the miners are able to very, very quickly, by switching on a button, they can literally get the whole fleet moving up in literally less than 60 seconds. And so this is the great thing about what the miners bring to the table. They can, they're a demand response business. They don't have to wait for things to warm up. They can switch machines on, switch machines off during the day. When curtailment's required, when the energy prices increases. So some of these miners are on market rates of energy. And in certain areas, market rates changes every 15 minutes. So, you could be paying 5 cents a kilowatt hour at one point in time. It could rise to 10 cents a kilowatt hour the following hour. So when it goes to 10 cents and it's just unprofitable for miners to mine, they'll switch off the machines. So that's a reason for the gaps. Now, I always look at the day-on-day change from the previous month, which is also a highlight to see who's actually improved their hash rate or their operational hash rate through the month. And if you look at that particular month there, Riot stand out. They actually increased their hash rate by just over 2%. When you think difficulty was increasing, also curtailment impacts, they actually managed to eke a bit more. And that's because two things. They managed to increase their average operational hash rate up to 29.3 from about 27 and change from the previous month. So they've managed to eke out more hash rate. We've been saying for a while now that they've been starting to get closer to where we need them to be, and now they're sort of like getting to that point where they are getting, a lot closer to their installed hash rate. So 29.3 as opposed to 33.5. That's literally just over about 10% difference. That gap's going to continue to close over the next couple of months, and then when we're into sort of like the spring months, we expect a lot more parity between average and total, and that will apply to all these miners. In terms of HODL, and we'll come on to a slide that breaks it down a bit more. Obviously, the one standout company is Marathon Digital with 45,659. At the end of January, that had a valuation of $4.6 billion. And that helps, a lot towards Marathon's total percentage of its market cap that's made up of its Bitcoin HODL. I think last time I looked, it was in the 70%. Sort of 70 to 75%. Only Hive Digital and DMG get anywhere close to that number in terms of what their HODL is valued at in terms of their market capitalization. But people need to remember, these miners are trying to increase their hash rate at the same time as mining difficulty is constantly increasing. If we go back to January last year, look at what miners were mining in January last year. I can remember Bitfarms and Hive, the top two operators from January last year. They were operating around about, I think, 60 Bitcoin per exahash. And we look for January 2025, a year later, and Bitfarms is achieving 17.95 Bitcoin per exahash. Now, the sharp people out there will say, but Anthony, there was a halving in April. Well, of course, there was a halving. So if you think about that 60, that becomes 30. But actually, Bitfarms are only operating at 17.95. So the halving last year and the difficulty, the difficulty is getting on for being like an extra halving in the year. So it's becoming a real challenge for the Bitcoin miners, even the really, really efficient miners, to really start, making some, really good margins out of this business. We've just had 3 sets of results in terms of CleanSpark, Hive, and IREN. And IREN had, really, really good results without any benefit from the FESB rules. And when you think about, $117 million of revenues coming through, they were able to achieve a profit of about 18.9 million, which when you think about it as a sort of like a margin, a profit margin you've received across all that revenue, it's not that significant. If the Bitcoin price doesn't rally and the difficulty gets even higher and reduces that production, it's going to squeeze the margins from some of these miners in the current quarter that we're in now and subsequent quarters. So it's going to be very interesting to see the rest of the miners coming out with their updates to see how much they've actually achieved ignoring the FESB rules. Because the FESB rules are great when the Bitcoin price is rallying, but as soon as that Bitcoin price starts coming down, what's it going to look on the likes of Marathon, Riot, CleanSpark, some of these companies that have got really, really big hodls, and they'll see the reverse position of this FESB rules very, very quickly.
Yeah, they most definitely will. And I like how you bring up difficulty again, Anthony, stressing the importance of that on this industry. You guys, if you watch any other Bitcoin mining stock channels and they don't frequently talk about difficulty, I would highly encourage you to leave a comment or two. This is such an integral part of the industry. And unfortunately, as you say, Anthony, been a major headwind for all of the miners, really since we've started reporting on this channel. Now, we wanted to start off with that side. Obviously, it gives a great summary of all of these metrics. As you walk through those different categories, the numbers really start to tell a story there, Anthony, and you can see the efficiency, the operational excellence that Riot and Jason talked to us about on the podcast just recently, now coming through in those production reports. Now, you mentioned a little bit earlier 4 miners running away with the show. The next slide here looks at Bitcoin mined in January. Same story, Anthony. You can see there's now 4 miners up in the 500 plus club, and then essentially a 50% drop off to the next closest in 5th place. Again, Marathon 750 Bitcoin in the month of January.
Yeah, I mean, Marathon, expected when you've got that size of a hash rate there, 53.2, achieving 750 Bitcoin. Bear in mind, if you remember back to December 2023, and they achieved, 1,800 and 53 Bitcoin in 1 month there. So, this is a lot different from that point in time. CleanSpark have done well. They've been ramping up their hash rate alongside Riot and IREN over the past 12 months as well. So all them 4 miners have really, put the hash rate out there, probably each of them achieving in excess of, 20 exahash in a year, single year. In terms of obviously the growth by percentage, IREN takes that title, growing from 6 exahash all the way up to 31. So over 400% increase in hash rate there, followed by CleanSpark, followed by Riot, followed by Marathon. But all 4, as you say, achieving a gulf of Bitcoin between them and then the likes of Core Scientific, who Core Scientific are the miner that have mined the most Bitcoin of all the miners since Bitcoin mining started. So even though Marathon are achieving a good monthly update, it's going to take many, many months and years before they'll even catch Core Scientific and be the largest miner having mined Bitcoin since they became public miner. Then you've got the likes of Cipher, who've 13.5 exahash. We should see Cipher increase this year quite significantly as their Black Pearl site comes online. So that'll give them more hash rate. And, there's a couple of miners, Cipher and Bitdeer, both fall into that bracket where they're around about, 11, 12, 13 exahash. But by the end of 2025, we could see that number, getting close to 30 to 40 exahash, depending on how quick they can expand at their sites that become more operational this year. So expect bigger productions from those 2 there. We've also seen Bitfarms, who were hoping to achieve a higher hash rate quicker than they expected. They didn't quite get there in time. They've set out some new targets, although they'll get to 21 in terms of installed hash rate by the end of June. They believe that because of some of the miners that need to be replaced, that's effectively more like 18 exahash. But they are starting to see, a turnaround in the company, and it'd be interesting to see, the end of the first quarter, how things, come out. So they've had a little bit of a bad luck. Maybe that time's changed. Ben's always positive when he comes on the show. He was buying shares in the company recently. That gives you a certain feeling that he's very positive about where he is. I don't see many other CEOs going out there and buying stock in their own company. Ben certainly did that, and that gives you a sort of resounding positive look from his perspective. He wouldn't be wasting his money if he felt he was going to lose it. But the interesting thing is, obviously that some of the miners at the bottom, DMG, 31 Bitcoin, they're looking to grow to, 3 exahash by the end of the year. So, they've been building, more selectively during their period. They haven't gone out and got massive loans and debt. They've just been acquiring Bitcoin miners as they can, selling some Bitcoin to help that, selling, some shares, a little bit of debt, but just growing accretively through the process. They've got a really good miner efficiency fleet now, so I'm looking forward to their figures. DMG normally come out with really good earnings. They're one of the smaller miners, but actually do everything really, really well, and they don't go out there paying what I consider to be like some of the pop star wages that we've seen from some of the mining companies. So, earnings weeks over the next month or so will be continuing. Next week's going to be a real big one. We'll see the likes of Cipher, Marathon, Riot, all releasing results whilst we're in New York. So there'll be a lot of work to be done in the sort of like when I get a moment there to go through those and prepare for some podcasts while we're out there to give updates on those results there. But yeah, Bitcoin mine, it's obviously the larger miners are getting bigger, the smaller miners are growing, but just not keeping up with the global hash rate. So that's going to be the challenge, and where we see this in a few years' time will be interesting to see if all these miners can maintain where they are.
Most definitely. And you bring up Bitcoin Investor Week in New York. That's going to be a fun one. You and I are headed out there Saturday to Saturday, I believe, Anthony. And we just got the schedule. Actually, we're not speaking at this event, but a number of high profile attendees, including many of the CEOs that we cover on the channel in the Bitcoin mining space. So I'll bring up the calendar here of the week, Anthony. You can see a number of conference style days, but also some big VIP dinners and events. We've got a number of dinners scheduled ourselves. And in some of the cases, as you mentioned, Anthony, we'll be doing earnings interviews on location in New York. So that should be a good one. Looking towards Thursday, Friday, so the end of the week, you can see exactly how action-packed these days are going to be with a number of key speakers back to back for the majority of those 2 days at the tail end of next week.
Yeah, looking forward to it. Like you say, a lot of speakers, a lot of the miners are going there as well, so it'd be great to catch up with a number of the CEOs that we've had on the channel, get them to see them face to face. Always good to meet up with them at these locations. So yeah, looking forward to it. And New York, haven't been there for many of you. I think nearly 20 years since I was there. So looking forward to going back.
Most definitely. And PubKey, we're going to make an appearance there. So that'll be our
Absolutely.
first time.
On the Monday, I think. Yeah, pub key. Yeah.
Exactly. Why not on a Monday? Hey, now the next chart, you made reference to this in relation to the impact of difficulty and halving. This one's talking about production by exahash. So essentially looking at how much juice these companies can squeeze based on the amount of exahash in their fleet. We mentioned last year, prior to the halving, Bitfarms in the 60 Bitcoin per exahash range. You can see now the leader in this table, CleanSpark, closely followed by Riot, despite all of these enhancements in fleet efficiency, still in the 18 Bitcoin range, given the impact of halving and difficulty.
Yeah. And actually, some of the miners in the 13 range. So what struck my mind this when I saw the results come out for January is that we had some new miners at the sort of the top of the table for the month of January. Obviously, we got a whole year to see who becomes the most efficient miner from an operational standpoint at the end of the year. Which Bitfarms and Hive were the two dominant miners last year, but it was very, very close. And what we're seeing already in this table here is that the top 6 or 7 miners there's literally a hair between each one of them. So CleanSpark came out as from an operational perspective, we're achieving the most Bitcoin with their operational hash rate, closely followed by Riot, IREN, Bitfarms, and Digital. So Hive in 6th place, but only fractionally, not even. We're not even talking like a 1% difference between those at the top there. So we know that the Riots and the Bitfarms and the Hives are generally consistently good. Let's see how this maintains out. But last year, I think there was 6, 7 miners at the end of the year separated by less than 2% over the whole year. So it's going to be close, and it should be close. These miners have got, they've all got machines that operate. So you plug in the hash rate, and you should be, driving the hash rate that you've got on the machine there. So there's only certain things that can affect this. So it should be most of these miners should be at the same level. And that's what we're seeing. A change. Go back 2 or 3 years ago, there was big gaps between all the numbers, but now we're seeing this last year and a half real. Close proximity to every miner, that's listing their results. So that's a positive thing. It means that they're trying to eke out as much as they possibly can. And, there are reasons why some of the miners are at the other end of the table there. In terms of like Core Scientific, where their locations were, they're still swapping miners over for new homes to make way for the HPC facilities. So, and they also gave back a lot of megawatts back to the grid to help the domestic demand. So that was clear in their update. I think it was over 40,000 megawatt hours given back. That's going to affect your operational output. So the number of reasons why it can be low, but as I say, top 6 or 7 all within a whisker of each other.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. They certainly are, and it's nice to see, as you say, an industry that's evolving, getting more and more competitive, and that distance between each one of these positions getting smaller and smaller down to the fractions. I know you've had to increase decimal places on that chart as well, Anthony. Now, next up is Bitcoin sold by percentage of production. Again, a vast array here, Anthony, ranging from 0 all the way up to 100% of production. And then it looks like Hive tops out the list, 245% of production in the month of January.
Yeah, absolutely. And, it's clearly Hive are using some of that Bitcoin they've sold there to fulfill the requirements of their deal with Bitfarms to buy that 200 megawatt facility in Paraguay. So that's a reasonable explanation for their selling. Cipher also, when you think about the Black Pearl site, they're obviously choosing to sell some of their HODL whilst it was close to $100,000 a coin to help pay for some of the capital requirements for that site coming online this year. So Mine's going to make decisions of how they use the 3 levers that are available to them. They can either sell shares, they can raise debt, they can sell Bitcoin. Those are about the 3 main levers that they've got their availability. In terms of not selling or selling very little, some of the usual suspects are there. So Marathon have not been selling any Bitcoin for a significant amount of time now. They're putting all their Bitcoin into their HODL. So they're obviously having to raise cash via other means to pay for their operational and capital requirements. And so, they have an ATM in place. They've also had 2 significant HODLs in recent months to help purchase more Bitcoin, and so they've been using other means to pay for their operational update. Bitdeer, like Core Scientific, are 2 of the miners that previously sold on a daily basis, but have now decided to effectively HODL some or all of their production. So we can see Bitdeer didn't sell any Bitcoin during the month of January. They receive Bitcoin from their self-mined operations, and they also receive Bitcoin from their hosted operations as well. And so that Bitcoin is going into their treasury, and they're starting to build up, a nice stake in Bitcoin. CleanSpark have been growing their Bitcoin in their treasury over the last, 18 months, 2 years, and they've got over 10,500 now. Only 4 companies ahead of them in terms of Bitcoin held on the balance sheet. Riot also, I think they're number 3 in the table of Bitcoin held balance sheet. They've been hodling majority of their output for the last few years. Actually, I don't think Riot have ever sold more than their production in any given month. So that tells you how serious they think about Bitcoin hodling there. And Bit Digital at 7%. They also have a serious stack of Ethereum as well. So, using the HODL there, they firmly believe that the price of Bitcoin, price of Ethereum is going to increase in value and give them a benefit in the longer run there. And then we have as I say, two or 3 miners, IREN at 100%, Soluna sell at 100%. So they're selling their daily production. We haven't included TeraWulf this month because they stopped doing a production update for Bitcoin mining. It shows that they're now fully focused on looking towards their HPC and not as focused on the Bitcoin mining. And Patrick Fleury was very clear about their direction on the last couple of podcasts that we've done with him. So that didn't come at a total surprise to us. Maybe to some retail investors, but we could see the writing was on the wall when they announced the new HPC contract that's going to take place at the Lake Mariner site. But they, again, were one of the miners that don't HODL, firmly believe that the best benefit to shareholders is to sell the Bitcoin and utilize that to grow and effectively at some point in the future, maybe give back to retail investors via a dividend type thing. So that's the Bitcoin sold. As I say, it's highlighting obviously the companies that are really in there to hodl. But remember, when you're hodling, you've got to still pay the bills, and how you're going to do that. Leads retail investors to try and understand what lever you're going to pull. Is it going to be, a constant use of ATM? Because you have to raise cash to pay your operational. The energy bills for some of these miners is, as we know, it's significant. When Marathon have got 53 exahash all lit up and going, and Riot are on 33.5 exahash. That's a lot of energy used every month, so it's a big bill to pay.
Yeah, that's great. We're continuing to move along through the slides here. So next up is going to be revenue by energized hash rate. Now, we've been doing a lot of work on our website, powermininganalysis.com, specifically on the individual miner tabs, Anthony, putting data in there. We would encourage you guys to go and take a look. We're actually expanding, adding new metrics, new data, new tables every single week to the website. One of them that we've talked about is similar to this table, revenue by megawatt. However, the difficulty there, not all the miners disclose that revenue metric each month as we start to talk about HPC and these other business avenues or business income streams. The other problem is with the rapid growth we're seeing, the amount of megawatts is changing in real time so quickly with these companies. But we did want to highlight that, Anthony. And if there's any other metrics you guys would like to see, leave them in the comment section below. We can definitely take a stab at them.
Yeah, absolutely. And if you think about, miners expanding their operational hash rates to include information about the HPC, we know that the likes of IREN have been doing it for a number of months now. Bitdigital have been doing it all the way through 2024, and who can blame them? I mean, you look at their HPC revenues; it's about as much as the rest of the mining group added all together. So, I'd be flying that flag quite high if I was getting that amount of revenue coming through from my HPC business service there. But as more and more miners go into that space there, we'd hope that they'll follow the lead from those two. I think Hive also put out information on a regular basis about their HPC. So as more and more miners come into the space, maybe they can follow that lead and we get more information out there, gives us more metrics and another dimension to include in discussion, because I think the HPC is going to be a very much a focal point in the space now for these effectively data center management companies. And that's what they are, really. I mean, Bitcoin mining is managing data centers with ASICs in them, and London also manage data centers with GPUs in them. So they are data center managers, and we want to do as much information and metrics around that business operation. But this is the revenue by energized hash rate, and this will be where companies are getting their operational hash rate closer to their energized hash rate and making the most of it. So the likes of Bitdigital, DMG, Hive, IREN, all doing really, really well. Soluna had a couple of months now where they've had some issues at some of their sites that they're obviously rectifying as we speak, so we expect that number to increase there. HUT and Bitfarms have also announced that they've had a reduction in some of their operational hash rate compared to their energized hash rate. So if you think about Bitfarms, I think they've got over 15 exahash in terms of what's plugged in, but they're actually achieving around about 11. So we need that figure to get closer to give them more revenue per energized hash rate. So this is about what you've got plugged in, not about what's your averages. So it does sort of like eke out another dimension to these companies. So yeah, good months for Bitdigital and DMG.
It certainly was, and a very interesting metric. I know that's one of my favorite monthly slides that you produce since we started doing this podcast, Anthony. Next up is talking about Bitcoin HODL. You already made reference to Marathon, way out in first place with this one. Interesting, however, when you start to look at the cost to mine, it'll be great to see Marathon's earnings next week. They do have a large HODL, but unless they can get that Bitcoin mining business unit profitable, it does bring up a question whether or not you're better just buying exposure to Bitcoin or specifically Mara. Directly following them, we've got Riot in second place, over 18,000. And this month, we've seen CleanSpark now surpass HUD 8 to round out the top four in terms of HODL.
I mean, you're quite right. The likes of Marathon, I mean, they obviously the biggest mining company, biggest HODL. However, in a sort of challenging sense, they also have probably one of the highest costs of power, and bear in mind a significant amount of their operational hash rate is hosted, so they have a hosting charge incorporated in that. So when their results come out, it's going to be challenging for them to have made a profit without the benefit of the FASB rules. So, we've talked about this extensively over the last sort of 6, 7 months now as these rules came into to use. And, when the Bitcoin price is rallying, those with the HODL are going to be green as anything and look really good. We saw CleanSpark there, $246 million net income compared to IREN, which achieved 18.9. Now, on the face of that, you think, well, there's one standout miner. But bear in mind, CleanSpark had 260 million of benefit from the increased valuation of their Bitcoin HODL. So if they hadn't had that included, I'm afraid that would have been a net loss for that company over the period. When you start factoring in all the real costs that a company achieves. Now, I focus on a lot of the cash costs, so I don't take account of stock compensation or depreciation, but they're real costs, and I've explained that many times. So when marathons come out, I foresee they'll have probably a net income, maybe 4, 5, 600 million dollars for the quarter, and everyone will be going, "That's fantastic." But I think you'll find that the increase in their Bitcoin valuation will be in the region of probably 6 or 700 million. And therefore, once you take that away from their net income, you'll see the true effect of what their mining operations have delivered over that quarter. And that's when the Bitcoin average price was probably around 84,000. If you're not able to make a profit at $84,000, at what amount can you start making a profit? And this is going to be the problem as we go forward in towards the next cycle, with the mining difficulty continually increasing as the global hash rates continues to increase, where some miners around the world are tapping into cheaper energy or effectively free energy. It's challenging for everybody else, even if you've got really low rates. And we've already spoke about the likes of Cipher, the likes of IREN, the likes of Riot, who've got really low rates, also need that low efficiency on miners. Well, IREN are top the list on in terms of efficiency. Some of the other miners have got low rates, don't have that level of efficiency that IREN have. So without those two factors being, exceptional, you pay more for your energy costs. And really it's about energy, because that's your biggest cost. You can control other costs. You can spend less on, on salaries, on marketing, on professional fees. They are sort of to a certain level discretionary. But you can't change the cost of energy that you're paying unless you're able to find cheaper energy elsewhere. So, it's a real issue, and we'll start seeing that highlight. But if the Bitcoin price continues to rally all the way up to 3 million over the next 2 or 3 years, what I've just said was probably a waste of time. But we know from previous cycles, we may end up seeing the Bitcoin price drop down again. And then when those quarters come through, you're going to find that those companies with the big hodls are going to have the biggest losses.
Well, that's exactly it. And that's why we're predicting, as governments start to get these strategic Bitcoin reserves, they may get involved with mining and essentially free access to energy or the energy input costs. Now, next up, we've got rank by utilization. So this one, we've talked a lot about how CapEx intensive the Bitcoin mining industry is. This one essentially looks at how well you're able to utilize the fleet that you have. So you talked in the intro, the difference of operational versus overall hash rate. This is exactly what that metric is.
It's a little bit more, basically this looks at your energized hash rate and what, with that energized hash rate, what you should have mined in terms of Bitcoin. So we know how much Bitcoin is in terms of rewards is achieved per hash rate. So if you have 5 exahash plugged in, we know what that 5 exahash will deem in terms of rewards, because we know what the total global hash rate is, or the average is for that period. And therefore we can assess what the amount of Bitcoin is issued every 10 minutes. And therefore we can break it down to literally how much you should receive for each hash rate. So by looking at what you should have achieved versus what you did achieve, then this is what the percentage comes out at. And we talked about Bit Digital and DMG, who from an operational standpoint were operating close to what their maximum amount of machines that are plugged in were achieving. So 95% Bit Digital, 91% DMG. Hive, again, always consistent in a lot of the metrics. You always find them in the top half. IREN, again, another mine that's up there. Riot. So again, that improvement from Riot, 86%. I mean, go back 4 or 5 months ago, that was probably closer in the 60 to 70% range. So we've seen them come through quite well. The biggest, from the big perspective there, Marathon at 75%. So we talked about that 750 Bitcoin, but if you've got 53.2 exahash out there, then really you should be bringing in, probably close to 900 Bitcoin, maybe even more than that. So they were only able to achieve 75% of their Bitcoin expected there. Core Scientific, we've talked about the problems they've had in terms of they've given a lot of power back to the grid, and also the fact that they're getting their sites ready for HPC. So they've been reducing hash rate, and they've been also moving hash rate. So that's the reason for their utilization being down there. And I've talked about the issues at HUT and Soluna already. So again, utilization, really good metric, because you can turn around and say how much you're mining with your operational hash rate, and that might be great for you. But once you put the utilization, you won't normally see the same miner coming top of utilization and top of Bitcoin by operational hash rate, because this will sort out those that are achieving really the best from the machines that they've got in total, not just what they're actually operating with.
Yep, the proof is in the pudding, as they like to say. Now, next slide up, fleet efficiency. This is a new addition for 2025. Very interesting slide, though, to see the spread here. Again, we've got IREN, essentially the best of the best machines you can get right now in the 15 joules per terahash range. And then you go all the way up through the teens, 20s, and into the 30s in the case of Bitdeer and HODL.
Yeah, IREN, we've talked about them. They've been at 15 for quite a significant amount of time now, so they're operating in the most efficient fleet. CleanSpark is getting very, very close. I mean, a couple of months ago, CleanSpark were closer to 20, but they've ramped up their hash rate, and also it's with new machines. So when you look at their blended fleet efficiency, that's coming down come down really well to 16.15. That will continue to come down as they get towards their target of 50 by the end of June, halfway through this year. Cipher will increase their efficiency. So they're already at 18.9. Anything below sort of 22, 23 is pretty good in terms of fleet efficiency at the moment. So Cipher at 18.9 with 13.5 exahash, they're going to start bringing in a lot more of the S21s into the Black Pearl site. That'll bring their efficiency down close to what CleanSpark and IREN's is. Plus, they have a really cheap energy cost there, 2.7 cents a kilowatt hour. If they can maintain that level across their site there, that will give them a real low cost of energy. So I expect in terms of mining margin for Cipher when they produce their results, I think those will be pretty good. I think those will be at least on a par with CleanSpark, maybe even slightly better than CleanSpark. It'll be yet to see about their operational costs. Sometimes they're a little bit higher than other companies in terms of G&A, in terms of payroll. But from a mining margin, certainly one of the most efficient miners out there. Marathon, again, we talked about the fact that they've not performing to their fullness in terms of utilizing all their hash rate, but they've got a very, very efficient fleet, and that's come down considerably. A few months ago, it was at 25, then it dropped to 20, 19.4 now. As they continue to grow their hash rate to get to their next target, that will keep coming down there. The same with the lines of Bitfarms. Bitfarms came down from 21 to 20. Riot has also come down. Hive at 22. I think that's a typo there. I think theirs is 22 joules a terahash. So also benefiting from their fleet efficiency. But in their results that came out recently, it was the energy cost that was a bit of a worry. Probably paying closer to 7.5 cents a kilowatt hour. When you compare that to IREN at 3, sense, it's a big difference, and that affects their margin. I think their margin was coming in for about 21%. Compare that to IREN, who were achieving a margin of 74.5%. And going to the end of there, Bitdeer at 30.8 and HUT at 31.7. Both of those companies expected to bring in significant amounts of hash rate during 2025 with the most efficient machines. We're looking forward to seeing the Seal Miner A2 being installed at Bitdeer site. And HUT have just signed an agreement recently with Bitmain for, I think up to 25 hash rate of the most efficient mining machines out there. So we could see that fleet efficiency really drop into sort of like the top 3 or 4 miners, as we go through this year. So that'll give them, along with their energy price, which they reported was about 3 cents a kilowatt hour. That'll give them the two prongs that they need to do to achieve cheaper mining Bitcoin, as well as looking at their HPC business. Always having cheap energy for that as well will give them better returns.
Yeah, definitely. HUD 8 and Bitdeer one to watch in 2025 as they improve or overhaul those fleets. The final slide here, and I did want to mention, Anthony, this is all published in the Compass Mining website articles section as well. So if people do want to go in, take another look at these graphs, talk about some of your commentary, or look at your comments in real time, they're able to do that. The final graph here looks at Bitcoin mined per megawatt in the month of January.
Yeah, and it would come as no shock as to see why IREN's at the top there. IREN have the most efficient fleet. So when you have the most efficient fleet, you're not using as much power to mine Bitcoin. So they're able to eke out effectively 25% more than Hive are. We know Hive are one of the most efficient miners out there. So that just gives you an indication, from a power perspective, how many Bitcoin they can produce. They're producing 1.02 Bitcoin for every megawatt, and they've got something like 510 megawatts of power, the majority of which is at the Childress site. And again, the numbers on here shouldn't come as a total shock. You've also got the likes of Hive and CleanSpark and Mara. Those companies that have, really efficient fleets should be closer to the top there because they're using less electricity. And looking at the other end, you've got the likes of Riot there. Riot have got significant amounts of power at the Rockdale facility, and obviously now with 400 megawatts energized at Corsicana and another amount of energized at Kentucky, that takes them, I think, to something like 1,260 megawatts. They're just not getting the use of all the megawatts at the Rockdale facility at the moment. So that's probably the reason why they're only producing 0.42 from all the megawatts that they're utilizing at the moment. So still work to be done there. But it's a good indication of, again, it says exactly what it says on the tin. It's how much your megawatts are being utilized in the production of Bitcoin. And so it's a really good, you can't hide from this because, you state what your megawatts are, you state what your Bitcoin mine using those megawatts, and, the metric comes out as it is there. So, the IRENs and the Hives and the CleanSparks looking really good.
They sure are. So the horses are out of the gate, the first of 12 months in 2025. Again, all of this information in the Compass Mining article and posted on the Power Mining Analysis website. While you're on the website, you can also take a look at Miner Madness 2.0. We haven't talked about this a lot, Anthony. We've been so busy with interviews, earnings, and press releases. However, despite some of the challenging conditions in Q1 here for the miners, still some impressive returns on the leaderboard. We have one contestant, W Peel, up in excess of 30%. We're about halfway through Q1 or Miner Madness 2.0, followed by David up just north of 20%. And then from there, everybody else in the teens, Anthony, in terms of the top 15 leaderboard here.
Yeah, and one thing I'll say though is it changes so quickly. I was, I think, in third place, I don't know, 3 or 4 weeks ago, and now I think I'm in the 200s now. So we've seen a very volatile mining market, and just when you think you've selected, some of the miners that'll do really well. In fairness to W Peel and David, they've been at the top pretty much most of the period of the competition because they'd selected NDA, Neptune Digital Assets, and DigiHost, which have been two companies that have really excelled in terms of share price growth over a period when a lot of the mining stocks have done very little or actually negative positions. That's really helped them out there. But we've seen in the last couple of weeks the likes of IREN and Cipher and CleanSpark start to gain a little bit of momentum. Obviously, the results helped those companies in the last week or so. So there's been a shift there, and we can now see that that leaderboard is dominated by IREN, Cipher, and CleanSpark in terms of choices. If you look at what's been consistently picked across the board there, but we're not even halfway through, or just over halfway through the competition. And so, yeah, it's been a great competition. I expect a lot more changes between now and the end of the period for the competition, the end of March. It might even come down to the wire. If you look at how many people are in third place and then sixth place, a lot of people have selected the same miners this time. They've been very picky. So Cipher, IREN, CleanSpark, IREN, Cipher, CleanSpark hold quite a few positions there. It's going to be down to the Bitcoin price. So that would be interesting and grateful that a number of people have chosen different Bitcoin prices so it can help us. But that's the main leaderboard. Over to you to talk about the analyst leaderboard.
Yeah, as you said, Anthony, you and I not doing as well as we did in the first iteration of Miner Madness. We're kind of mid-pack on the analyst board here. By Sam is up top in first place, followed by Agrippa Investments. And interestingly enough, on the IREN earnings call, Dan opened it up to some questions from the Twitter group, and Agrippa was able to ask a great question on there. So great to see some of these analysts interacting on the earnings calls as well. But as you say, Anthony, anything can happen in the next 6 weeks here.
Yeah, absolutely. And there will be a lot of change between now and then. Obviously, a shout out to our close dear friend Dan or DR Lewis, who passed away sadly a couple of weeks ago. We were fortunate to go on a Spaces meeting last Friday just to talk about some of the special moments that we had with DR over the last year or so, and we've known him for quite a while now. He's been friends of ours for well over a year in the space, and he created some really good content, got a really good following going together, worked hard like a number of the analysts on that board do on a day-to-day basis, and found time for everything. So keep our thoughts with him for the remainder of this competition because he was a big part of it. And he enjoyed the competition. I think at the start of the period, I think he was actually leading the competition. So, he was very quick to post on Twitter all the positivity that is especially around where he was placed. I think he'll be looking down now, hoping that Marathon, Hut, and CleanSpark can up the ideas and get away from that position at the moment because I don't think he wants to remain in the 300 position. But as I say, our thoughts are with DR for the remainder of this competition. Great personality, great guy to be friends with.
Yeah, most definitely. I would love to win this competition as a back-to-back win, but more than that, I'd love to see DR climb the leaderboard and take a final win for Miner Madness 2.0. But a very fitting close to the podcast. You guys, hopefully you're having a great long weekend. Family Day here in Canada. Markets resume trading on Tuesday, so we'll be back in action with another big week of earnings, news, and no shortage of excitement in the Bitcoin space. Thanks so much. Hit the like button. Feel free to subscribe. We'll see you back here on Tuesday.